Deciphering Canadian non-resident rental tax rules. What you need to know. Understanding non-resident rental income tax requirements for Canada. For individuals earning rental income in Canada, but residing outside the country, navigating the tax implications can be complex. Canada imposes specific regulations on non-resident rental income, requiring compliance with Section 216's tax provisions. This article aims to shed light on the essential considerations and requirements for managing non-resident rental income in Canada. The basics of non-resident rental income. Non-residents who earn rental income from Canadian properties are subject to taxation under the Income Tax Act. The Canada Revenue Agency, CRA, treats non-resident landlords differently from residents, as they must adhere to distinct rules and procedures. Section 216. Tax. A key aspect of non-resident rental income taxation in Canada is Section 216 of the Income Tax Act. This provision outlines the obligations and procedures for non-resident landlords to report their rental income and pay taxes on it. Under Section 216 tax rules, non-resident landlords can choose to file an income tax return in Canada, reporting their rental income and associated expenses. Reporting requirements. Non-resident landlords must file a Section 216 income tax return no later than June 30th of the following year, in which the rental income was earned. This return must include details of all rental income received, along with any related expenses incurred in earning that income. Withholding tax. When a tenant pays rent to a non-resident landlord, they are required to withhold tax on the gross rental income. The withholding tax rate is typically 25% of the gross rent, unless a lower rate is specified under a tax treaty between Canada and the landlord's country of residence. Claiming expenses. Non-resident landlords can deduct certain expenses related to earning rental income in Canada, such as property management fees, maintenance costs, property taxes, and mortgage interest. It is essential to keep detailed records of these expenses to support any deductions claimed. Compliance and penalties. Failure to comply with the Section 216 tax requirements for non-resident rental income in Canada can result in penalties and interest charges. It is crucial for non-resident landlords to fulfill their tax obligations promptly and accurately to avoid potential repercussions. Seeking professional advice. Navigating the intricacies of non-resident rental income tax requirements in Canada can be challenging. Seeking advice from tax professionals or accountants with expertise in international taxation can help non-resident landlords understand their obligations and ensure compliance with Canadian tax laws. Conclusion. In conclusion, non-resident landlords earning rental income from Canadian properties must adhere to specific tax requirements outlined under Section 216 of the Income Tax Act. By understanding and fulfilling these obligations, non-resident landlords can effectively manage their tax liabilities and maintain compliance with Canadian tax laws. Need help with non-resident rental taxes? Call 406-283-8704 or visit theaccountingandtax.com for expert advice.